In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manassero, and this is a show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes or Apple Podcast, type in Old Dogs, spelled D-A-W-G-S, find our podcast and subscribe. Well, we've got a great show ahead for you guys today. This is a gentleman who is going to talk about the thing that we real estate investors need to talk about more and more, and that is money and how to get it. And he is a banker, and he is a gentleman that has extensive background in all the things that we as real estate investors need to know more about. I'm talking about Chris Naghibi. Did I say it right, Chris?
You did indeed. And probably the most preeminent thing that I am is I'm a fan of the show. I actually, and a subscriber. So it's not lost on me that I think your audience resonates with me because it's of interest to myself as well.
Well, I appreciate that. And as an investor and a banker, we're definitely going to have some great stuff to talk about here. But for those of you that want to find out a little bit more about him, he is the Chief Credit Officer of First Foundation Bank. Chris is the Chief Executive Officer of First Foundation Bank. He is also the founder and CEO of Black Crown Inc., a disruptive collective that handles home purchases and commercial and multifamily real estate brokerage for high net worth individuals. Chris has 20 plus years of experience and has accrued $20 billion in closed transactions and $10 million in recovered costs for clients. As a licensed attorney, able to take control and democratize fear in the financial world. Well, Chris, welcome to the Old Dogs REI Network.
Thank you, my friend. And I apologize. That big, complicated background is kind of a long way of saying I really like real estate and I really like the pursuit of building wealth. That's all it really is.
Wow. If you just would have told me that ahead of time, it would be so much easier.
Yeah. It would have been a way easier intro, right? Yeah.
No, actually, I think it's important. People know that you are very talented here. You're in a lot of different spaces. You're an attorney, a broker, a contractor's license, author, and a banker here. And so I think your combination of expertise here is really important for people to know, because this isn't just some Joe off the street, you know.
Well, I try not to be, but, honestly, my goal is to never stop learning. And, success isn't a destination. You don't just get there and say, hey, I'm successful. It's a lifelong journey. And I want to continue to find myself along that journey. So these things really just accumulated over time.
Well, let's take a few steps back here, and let's if you can tell me your story and how you came into all of these different spaces, and real estate, of course, being one of those. Becoming an attorney and so forth. So, if you could give us your background, I think that'd be great.
Yeah, I would love to. So my father was in the mortgage business, and I started cold calling for him when I was 14. I had a deep voice. I was always a kind of a bigger kid. And I started cold calling with him. And I fell in love with the idea in the single family world of you could talk to anybody on the phone and it would get so personal when you talked about things. I mean, granted, this is a different generation and a different time. It really led to kind of a curious case for me where I saw some similar investors do so well, and then my father didn't come out of it as well as he wanted to, and frankly as he needed to. So over the time, I wanted to know more. So I left his company when I was younger, when I turned 18, to really find an opportunity to learn more about the complex world that I didn't know about at the time. I knew a lot about single family. I wanted to learn about multifamily apartments and commercial real estate, and I wound up underwriting loans. You flash forward, I'm running a division of a large multifamily and commercial real estate underwriter and funder. It was a good, huge capital corporation. They had some economic challenges, and those all were really powerful tools because a lot of people had insight into each one of them, but they didn't have a way of piecing them all together for a broader purpose. And then ultimately becoming the chief credit officer of the bank, I can tell you that every single day I rely on that underwriting background, that loan processing background, the real estate investor mindset, or I leverage the commercial contractor's license and some of the things that I have in my background, because those all take part in making good credit decisions as it relates to risk and relative risk for real estate investments and even business lending in some degree. It wasn't by design that I had this broad background. I call it schizophrenic, kind of sarcastically, because you try to explain what you do to people and how you got to where you are. It just sounds like you didn't know where you're going, and you kind of went in all the different directions. But for a savvy real estate investor, it kind of all makes sense. I've been in the financing side, definitely the banking side. I know the real estate side, and where we are today is that, I continue to operate my law firm. I do a lot of pro bono legal work there. It's usually to help people, and it's my way of giving back in a way that donating a loan to nonprofits just really isn't going to get you that tangible, tactile feel of actually helping people. The real estate brokerage is booming and alive. We operate that, and my sister and I are in the process of beginning to franchise that, which is great. We have locations in Oklahoma, opening one up in Texas, and we have Southern California. And the bank is full steam ahead, and I'm exceedingly proud of all of them and feel very blessed that I've had the opportunity to continue to work in all of them in this wonderful capacity where I'm able to balance so much work and still have time for my wife and my son.
That's great. That's great. What about that contractor's license? Now that doesn't seem to fit in the equation unless you were in your real estate investing, flipping or doing something that you might have wanted to have that kind of expertise.
Exactly. So my one of my close friends and a good mentor, he's a little older than I am. I shudder to say a lot because he would kick me if you heard me say that. But he's in his late 60s now, and he's thinking about retirement. And he's the closest friend to me that I've ever had, and he's always owned a lot of real estate. We got into a number of real pieces of real estate, not really because we were looking to make money, just because we wanted to find a good excuse to spend more time together on the weekends and really learn about the business that he and I were in. He owns a lot of real estate. I think he owns over 200 doors, and it made sense for us to do projects together because we enjoy spending time together, and it also gave me the opportunity to really get hands-on, as you kind of may have noticed already. I like doing things where I can see an instant change or a physical change, or kind of working with my hands. I've never been somebody who's had the ability to do something that's really creative. So real estate allows me a lot of that creative outlet. And we did a couple different renovations. I obviously have my own property. I did some hands-on stuff, and the more I'd done with time, the more I thought, well, let me just see if I can get some good discounts with a contractor's license. Let me see what it takes to get that. Reached out to the Contractor State Licensing Board, found out what they needed to get a contractor's license going, and realized that I had met all the criteria.
Wow.
So shockingly as it may have been, I had a lot of friends along the way. A great friend of mine who actually works at the bank, Kurt, has the oldest active contractor's license in the state. The guy's 75 years young, still bikes, I think, 100 miles a week. He's in incredible shape. The guy's a horse, and he's taught me so much over the years from a banking perspective. We'll go out to sites, we'll look at things, and he helped me kind of bridge the gap and experience of what I had doing it on my own, and that from a professional sense, and really teaching me along the way. And he's been a wonderful blessing along that path.
Wow. Well, it seems like your real estate involvement seems more on the residential side, right, for the most part?
Well, for my personal portfolio, I started there, certainly investing in single-family homes, largely because it was what I was new, and the barrier to entry was significantly lower. It was cheaper, frankly. In the Midwest, I still really am a single family residence heavy, because what I typically like is that my sister, who's a broker out there, feels comfortable with that product. And we get around a 10 to 12% cash on cash return because the rental rates are so good on the homes. And you can get a 4-bedroom, 2-bath, 4-bedroom, 2.5-bath. At the time when I started years ago for just north of over 100,000. Now you get them for closer to 240, 250. But the real estate valuations, appreciation in equity in the Midwest is not quite what it is on the coast or major metropolitan areas, but you also get great rental cash flow and stability over time, at least I've found. I have gone into multifamily and a couple of commercial properties, but I'll tell you that I'm very, very picky when it comes to those properties. And because I'm really in the business of looking at multifamily and commercial real estate on a daily basis, I'm very, very choosy of what my returns are. And sometimes it's hard for me to justify deploying my capital into something like that when I can get a diversification of risk on single family product and, basically better returns.
Are you still building that portfolio, or are you transitioning it or selling off, or where are you at in terms of your real estate investments?
Yeah, great question, my friend. I get this one a lot recently. I think it's because of where we're at in the economy, right? Real estate values are really high and so polarizing in some ways that you've had artificial interest rate deflation. You've had an unprecedented series of events like a pandemic. And real estate values, the single family market right now is incredibly white hot. It's super difficult if you're helping people buy homes, which is one of the things that we do. And it's even more curious if you're an investor because you don't know where it goes. You have Moody's, CoStar, you have, Redfin, Zillow, all these people that are predicting, at least they were predicting values to go up a little bit. Last year, if you recall, they were saying 3 to 5% increases in real estate value. And this year, 2021, well, in some areas, it was as high as 27%, 24 to 27% in some of the top markets around the country. So to say that they missed the ball or underestimated the market would be an accurate statement. But they're also saying the same thing for next year with the Fed holding rates to a possibly, no more than a 75 basis point increase through 2023. I know it's a lot of information, to answer the question, but I'll tell you, I'm cautiously optimistic about where things go, but I have a different perspective that I think it's important to share. I never buy a property that's not cash flow positive on day one. And if it's not something that I could rent on day one and make money from it, I'm not going to buy. Before the pandemic, I was buying on average 2 properties a year. I try to buy 2 single family properties and at least one other type, or look at one other type. And it usually wound up being, kind of 2.5 on average properties a year. This year, I've only bought one. And it was a single family residence in the Midwest. It was off market. We found it by just knowing contacts. And I think I bought it for $258. It appraised for $265. And it cash flows about $700 a month after paying all the, PITI. So I've slowed down. I'm really worried about my net worth. I think that's kind of one of those trivial numbers that we focus on. It really comes down to your cash flow. And as long as something's cash flow positive now, I don't really care where the market takes the value of that real estate, as long as I can continue to keep my cash flow there. And a curious fun fact is right now, despite the surging values in real estate, you're also seeing a resurgence of values in rental rates. Rental rates are going up, and they're going up very quickly. It's shocking, right?
Right. Big time. Yeah, in fact, one of the things that I think that one of those markets that's vastly underserved right now is low-income housing, because they're kind of left in the mire here. Because the market will take it. Rents are going up and up and up, and then there's this other group that, unfortunately, is sort of caught in a sort of a post-COVID, one of the many sort of phenomena that are happening in real estate right now that kind of caused that. And so, yeah, I'm kind of watching that whole space right now. It's kind of interesting to see what happened, but the demand is strong in that lower income area.
It really is, and demand is growing, frankly, across almost every area at this point. And I don't know where it goes. All we can do is take an educated guess. I am beginning to hoard a little bit more cash and try to be strategic about holding cash as a real estate investor. As you might know, we have this tendency to not want to put money in saving and holding it there, because that's a wasted. You're going to get 1% return from an investment perspective. You put that into a property, you can get cash flow, you can get returns. Put it in a stock, you can get some benefit. But, I know the rising cost of inflation is a thought, but, I can't help but think there will be buying opportunities, and having cash, even for a real estate investor like myself, would be a prudent move in the coming years.
Yeah, I totally agree with you, and I think it's another part of this phenomena is that a lot of real estate investors are taking that cash and converting it to crypto, and they're using crypto like I mean, they're lending it out. It's like this whole new banking thing that's going on, and on top of that, it's going up in value. So you're getting, this appreciation that's going on, but at the same time, it's very liquid, and when you need it, you can access it. So that's kind of a side note there that I've been noticing as I'm interviewing, a lot of real estate investors, especially younger real estate investors, that feel real comfortable in that space.
Yeah, the younger ones tend to really do that. I think I'm kind of on the apex of having a bit of an older mindset as a younger investor, at least what I used to feel was a younger investor. I'm also in the banking space. So the SEC recently stepped in, and they're taking their first real steps at treating this, essentially like a security or commodity of some type. Mm-hmm. And that's your first real step at regulation. You combine that with what China's done in the not too distant past there, and they've essentially banned it. You can hold it, but you can't trade it, and you can't have it actively going on. For you as a trader. And there was so much mining going on there. We're seeing an evolution of sorts, and at the same time, a lot of banks, regional banks, commercial banks, money center banks, are starting to think of getting into the space. And what they're doing is they're either setting up the buy, sell, hold, opportunities in their banks, or they're looking at making loans on the cryptocurrency, which has its challenges as well, because is that considered secured collateral when your security is effectively held via title on the blockchain? There's a lot of legal nuance as it relates to cryptocurrency. And while I still think there's an interesting value proposition in the blockchain, particularly as it relates to things like title and real estate. We have a chain of title, and the way that works is you go up and down the chain of title every single time you get a title policy, and you make sure the person selling the property can do so free of other encumbrances, or at least with full disclosure of other encumbrances. I know I'm a banker, I'm biased here. The U.S. currency is effectively digital. You don't have to have paper money anymore. You can even use your phone to pay for things electronically with a couple clicks. So, I don't know where this all goes. I get all the cryptocurrency stuff, the stuff that boggles my mind, and we're probably going to venture off topic with it if we go too far down that path. Right. NFTs, I get non-fungible tokens. Mm-hmm. You want to sell some music, you want royalties, you want to sell a piece of art, and you've got a NFT for titling purposes, great. You want to buy a JPEG image or an image of a cartoon monkey for millions of dollars? That's insanity.
Yeah. I don't understand that whole NFT. I'm still looking at cryptocurrency, kind of trying to figure it out, But one thing I do know, if it does get regulated and the Fed steps in, it'll totally change it, and it won't have the same appeal that it has right now. But
it's inevitable. It's going to happen.
Yeah,
it has to.
I see it, especially with the forces that are going on politically and so forth right now. But as I look at your background, I am a bit confused a little bit, okay, because I see this banker, okay, but I also see the founder and CEO of Black Crown Inc. Mm-hmm. I obviously see the investor, but I see how you can do that on the side. But you got law practice, you've got all these things. I'm going, how in the world is this guy doing this, and where is really sort of your main focus right now, and or how do you divide your time up with all of these different areas that you're involved in?
Well, this is the number one question I get asked all the time, and I can totally relate. So I have had a sleeping issue since I was a kid, and I'll say that me sleeping on average about 4 to 5 hours a night is, when you're a kid and you're younger and you're worried about your childhood, happy guy and drinking a lot of caffeine, it hasn't really been that impactful in my life. As a matter of fact, it's given me more time to do things, whereas other people would be sleeping. That's definitely part of it. I have 9 total calendars that I use to manage my schedule.
Wow.
But for essentially, this is the way it works for me, is that the law stuff that I do is pro bono, and most people have full-time jobs, right? So if you have a full-time job and you're working, you're generally not going to come see me if you can during regular business hours. You're going to come after normal business hours or on the weekend, which I'm happy to see you. As a matter of fact, I find that doing so takes a little bit of the edge off of stressful situations when you're talking about things that could otherwise be very intimidating to people, because they don't feel rushed to get back, after a lunch break, or, they don't have to take time off work, or they can bring their wife in and we could talk about things in a more complex set of circumstances that's relaxed. So I found that actually is a value add. As it relates to like the podcast and the book and all that stuff that we're working on currently, these are things that I do largely at night. And, it's easy to record a podcast when it's a solo thing on your own for 20 minutes in the evening. If on the book and writing, definitely easy to do at night. In the real estate brokerage stuff, it's easy for me to kind of manage emails throughout the day as they come in. There's not a whole lot of communication because so much of what we do is automated, and we've done that on purpose. But I also have really key people that I trust that run the day-to-day parts of the business for me and keep me in the loop at all times. My sister, as I mentioned before, really runs the real estate brokerage stuff now. My father is my office manager at the law firm. So you can kind of see how I've tapped into my network. My content team for social media is my other sister's company that I work with her, and she manages all my content production. So I really tapped into the people, and it kind of comes down from a philosophy like this. Like I was the oldest sibling, but more importantly, I've always felt that the more successful you become, the more you should be working to bring up everybody around you. You should be bringing up everyone's value proposition around you. If you're successful in a vacuum, it means nothing. If everybody else around you that you can connect with, they become successful, they do better financially, they do better mentally, they do better with their families, and they're able to achieve their goals, whether you've had some influence over it or you were just there to be, moral support, that makes you a better person. That's the true meaning of a legacy, right? It's not what the money that you died with. It's what you were able to do during your lifetime to help bring up the people's lives around you. And that's really all we're trying to do. That's why I have no problem doing pro bono work. That's why, I try to stretch out as far as I can. I love my wife and my son. I love the time that we spend together. But at the end of the day, if I were to be gone, I want my son to be able to look at our life and know that his father wanted people around him to do well.
That's nice. That's really, I think that I couldn't agree with you more. I think, that especially when you've got, just the multiple talents that you do, to be able to help use that to propel other people and really, generate a team of people, I think is so much more effective than a solo artist. I really do. I think, having a team and having people growing in their areas that they're interested in at the same time, being able to work with them and share your expertise. I think that's just the best of both worlds. That's awesome.
I like to think so too. I will say one thing though, it isn't always well received. I think there's, especially with the younger generation, where I really struggle to connect, and I've been trying to improve my appreciation for the latest working, age generation and demographic. I've had challenges where they feel that, your help is suggesting that they can't do it on their own. And I've never really felt that way. I've always been a big fan of true mentorship, not this online I pay for you thing, but connecting with people. Relationships are the truest form of currency, and having those relationships are so powerful. And I've had a real difficult time coaching and mentoring the younger generation in a professional environment without them either feeling entitled to the next level early or not appreciating your help in the context of you seeing the potential future in them if they had a little bit more help along the way.
Right. And I agree with you there. And I think there's different focus. It's really kind of interesting because my son is one of those that really is, I've got, has 7 kids here, but one, Elijah, he's 21, and he actually wants to learn about responsibility, and he wants to be a responsible adult, and really focuses on that. And he goes to places where he can learn more about being that kind of individual. And I think there's a movement. There's a lot of young men that seem to be, and women too out there, but it seems like it's really skewed a lot. And a lot of the young men that he knows that are kind of focused in this place where they want to be a contributing member of society and being able to be responsible in their actions and be accountable for what they do. And I think that gives me hope and encouragement too, is seeing that kind of movement going on as well out there with some of the young folks. One of the things I really wanted to look at too, and it's interesting too, because my son also is really into real estate and sees the promise in it in terms of being able to grow something and
awesome, yeah,
be able to use it for good and that kind of thing. And one of the things I did want to talk about is sort of the role of you're a CCO of a community bank, and for a lot of investors, their banking relationships they kind of stumble with. They'll look for a loan, they'll contact a mortgage broker, or they'll if they're buying properties, they're kind of buying all over the place, but maybe they're not focusing on one specific community where there are great opportunities. They may be all over. And just the value of a local community bank, I've seen it because I'm an out-of-state investor. I've been doing it for a while in places like Indianapolis and Atlanta and Memphis. And nice. and so, but I realized that in those communities, part of my goal is to, transform communities if I can, to go in there and to be able to provide positive experiences for people in their living and in their day-to-day life, and being able to do that through providing nice homes for people to live in, or nice apartment communities. And so I think that focus is something that is again shouldn't be a solo venture. I think you should align yourself with the local community development people and the Chamber of Commerce and all these various groups and the banking community who wants to fuel their local community with not only income and great economy, but to be able to partner with people to make things happen. And so maybe if you could just address that a little bit, your experience, I'm sure you've dealt with the big box banks out there and seeing the contrast. And maybe you can just talk, if you wouldn't mind, just a little bit onto what the community banking experience can mean to investors.
So it should come as no surprise that I'm very passionate about this particular topic. So I will apologize in advance for what probably is going to be a bit of a diatribe, in that there's a lot of perspective shift that I think people lose when they're so used to seeing these big box banks, the Wells, the Chase, the B of A. And there's nothing wrong with them. But keep in mind, in order to grow and scale any business like they really have to narrow down what it is exactly they're looking for. And if you don't meet the certain criteria, and FICO scores are a great example. Oh, you don't hit this particular FICO, you get the next lower down, rate risk tier, or you don't get a loan at all in some cases. They have to do that for scalability. Your local community regional banks, you're not calling into call centers in most cases. You're actually talking to your banker, your specific assigned banker. If you're in the multifamily commercial real estate side, definitely. If you're in a business side, you should definitely have an individual you're speaking to. You should not be calling into call centers. And even on the banking side, once you get to a certain point, that's what you get. A lot of high net worth individuals get that luxury of being part of a private banking group. And one of the misconceptions I think is out there is that you have to have a lot of money to have that experience. That is completely inaccurate. I've been declined, probably once or twice by Wells Fargo myself. And it's because they didn't understand my balance sheet as a real estate investor. You've got more than 10 mortgages, and all of a sudden you're perceived to be a higher risk. And, agency securitizers who sell in the secondary market, they're not going to give you loans because they can't sell your loan off in the secondary market. You need a portfolio lender. But you go to a community bank. You go to a bank where the value proposition is that relationship. And like I told you before, relationships are the truest form of currency. Banks know that. In order to grow and scale their business, they're like any other small business. The better service they can give you, the better your feelings are as it relates to that value proposition that you're getting, whether you have bank accounts there or loans, the better you're going to feel, and the more you're going to tell people about it in the local community. You're not somebody, 3 states away. You're somebody in the same city, usually in the same county, and you have the same primary goal that we do. You want to grow and scale your business, and so do we. So when you start thinking about your bank in a partnership capacity, why wouldn't you want to work with somebody who's steeped in your local market? Why wouldn't you want to work with somebody who understands what you're going through, who reads the same news you do every single day, who drives the work in the same area you do? It's astonishing to me that people don't. And I get that people are afraid that, during the Great Recession, for example, there were a lot of, capital calls and banks had issues. But banks, if they're FDIC insured, and almost all of them are, they carry the same level of FDIC insurance regardless of their size. Banks all have capital requirements, whether they're state, federal non-member or FDIC or, Federal Reserve banks or whoever their primary regulator might be. They all have capital requirements, and they are not light. They are pretty significant, particularly after the Great Recession and how some of the rules have changed. So what I'll say is this, is that I misunderstood community banking prior to being at a community bank. Sure, I've had some firsthand insight. Sure, I have some biasness. And this is not a sales pitch. I don't care where you bank, but all of us deserve better. And when you think about it, we all have a checking account. We all have a savings account. And because of that, you already have a relationship. The question is, does your relationship value you? Almost every single one of our clients can get my mobile number pretty easily by just calling up and asking for it. And they can call my mobile, and I encourage them to do that. That's not me, feeling important or magnanimous or, anything, weird like that. It's just me saying that you have access to the people who make the actual decisions. And if you want an answer, you get that. A community bank will also tend to portfolio because they're trying to grow their assets in their balance sheet. They're not really worried about secondary market. They have the ability to be more malleable as it relates to their rules. The overriding document, the credit policy that banks have, which say, what their credit decisioning has to be, typically isn't based solely on agency guidelines, your Freddie Mae and your Fannie Mae. They have a little bit more ability to be flexible. So if, like, for example, you had a collections account because you didn't know about, a lot of real estate investors, particularly ones with larger portfolios, they got a lot of bills and responsibilities coming in. Easy for things to be missed. It's not uncommon for them to have lower FICO scores. If FICO score was a sole eliminator of making a good loan, a lot of really, really high net worth, $100, $200 million real estate investors with hundreds of doors wouldn't be able to get a loan. And that sounds crazy, right?
But it's true. It's true.
But it happens all the time. And I've seen some weird stuff happen because people don't understand the value in it. One of my best clients is a single family guy who goes into what I would call areas that are typically less desirable to most. And he rehabs and renovates units, and he keeps them all on his balance sheet, and he keeps them, and he manages them and property manages them. He's a contractor by trade, and he's really kind of transitioned to more of a real estate entrepreneur than a contractor, but he definitely does his own work still. And he has such wonderful product, but he owns so many homes, nobody wants to finance him. I think he probably has hundreds at this point. I haven't even checked. I haven't even kept up. And the other thing to think about too, banks have a responsibility to lend in their primary lending areas. Okay, we can't take money in from communities that are considered to be riskier, lending communities, in the form of deposits, and then make loans in areas that are, for example, lower, perceived risk because people tend to make more money there, or there's a nicer area in general. That's discriminating behavior, and banks are not allowed to do that. Any place that a bank has a location, they're required to make loans in that primary lending area, and you can generally tell a bank's primary lending area, and if not, you can easily find it. So what does that mean? Banks are required to put money back out in the community. So if you're putting money in, you should be getting some money out in the form of, of loans to run your business. If you need a small business loan or you need something to help perpetuate your real estate investing, go to your lender, ask them what you need to do. They will tell you what the guidelines are. There's not a big secret there. I think people are afraid to ask, like, okay, maybe I don't qualify, or hey, I'm thinking about buying this franchise opportunity, or hey, I want to buy this piece of real estate. How do I get there? They'll tell you. It's not a secret.
Great advice there too. What would you say would be, for most real estate investors, their maybe the biggest mistake that they make in their banking relationships, things that you've seen over time and as an investor as well. What would you say that is something that people could learn from and try to avoid?
I don't want to label all real estate investors this way, but I think a lot of real estate investors have a tendency to think that the banks are their equity partners. You can't think of it as this is a great investment opportunity. Why wouldn't anybody want to finance that? Banks are not in it to be your equity partner. They're in it to make a safe and sound investment into your, I shouldn't say safe and sound, loan into your investment. They are only providing the debt, and they want to make sure in a worst case event scenario of repayment that they are going to recapture their money, because that's not their money. That's somebody else's deposit. That's basically a depositor's money that comes to their base, right? In banks, it looks bad from a number of different perspectives, not to mention insurance reasons why if you have assets that are continually going bad. You don't want to be in a financial position where you're making bad lending decisions, because that in, frankly, almost every economy, that is the number one reason that banks go under, because they've made bad loans. It's not the capital runs, it's the capital runs and bad loans that'll do it to you, or bad lending in general that'll take you down. You have to be able to make good, safe, and sound practices when it comes to making credit decisions. So they're looking at what you're doing from a risk perspective, not from an investment perspective. And although you might be totally comfortable with the risk and you might feel great with it, you need to just play the game the way it's meant to be played. And that is, you have to meet the metrics that the banks need. So a lot of real estate investors get really, really frustrated when they say, look, this is a no-brainer. This is going to make sense all day long. I can go in and do X, Y, and Z, get rents up, or I can, go do X, Y, and Z and turn the property into a higher value. You just need to accept the way the game is played and ask the bank what you need to do to get financing or what options you have, and really explore that relationship. When you get upset and get frustrated because the bank doesn't have the same investment mindset that you do, it's not because they don't understand your business. It's because you're not appreciating the limits that are placed on them by regulation and by that credit policy that we talked about.
That's good point. With our audience, folks that are approaching retirement or they're already in retirement, that are becoming real estate investors, it's a little bit different. When you're going to apply for a loan, for example, and you want to, and you've got a W-2 income, a nice salary. It's almost a slam dunk if you've got decent, credit and so forth. But, as people move into the retirement years, all of a sudden they're maybe they have a pension, maybe they have a nest egg they're drawing from, maybe they have 1099 income, coming in from their rental properties. But a lot of people too, like myself, I've been doing this for a while, and the tax advantages are so wonderful. It's great. But the problem is when you look at somebody's their tax statements, they'll see that there's no income or little income, and so the idea of getting a loan is just defies their criteria. So what kind of advice would you have for folks like that want to get involved with real estate? They realize, they are going to have to leverage, to at least get started. But there may be some challenges in terms of the lending part of it.
Yeah, and that's a really big challenge, and it's one of those challenges that I would say a lot of people don't understand because they look at everything through the lens of a W-2 job. You have that steady income and people rely on it. As you get more sophisticated, you don't have to be older to have this problem, and you own a lot of real estate, there's a lot of tax benefits that go into real estate. And the number one problem that I see is your taxes essentially show that you're not making any money. Well, that's after depreciation, that's after amortization, that's after your interest deductions. I mean, after all these benefits to owning the passive income, that is the reason why you buy it in the first place, right? You have this passive income and it's taxed at a lower basis. So I would say that challenge is a very common one that we see. You need to really get with a bank that understands what you're doing, a real estate investor bank. You need to get with somebody, and it's self-serving for me to say our bank is one of those banks that understands it, but we do. We're going to look at your schedule of real estate owned, and we're going to figure out, really what those tax deductions are. We're not going to just look at your tax return and say, you know what, well, Kevin here is not making any money next. And that's what a lot of big box banks will do because they have that scalability. They're looking for efficiency of processing applications, and you don't fit the mold of 90% of people that submit their tax returns who have a normal working W-2 job. Right. So that's definitely a huge kind of part of the problem there. And I understand and can appreciate that, not only as a real estate investor myself who has a similar problem when he applies for loans, but also as somebody who sees a lot of this. And whether you own 3 properties or you own, 100, the cash flow to you could be what you're living off of. And it doesn't matter how old you are. If you have that you're living off of, this is a problem wherever you go. So getting to a bank or an institution that can understand that cash flow is critical to you continuing to grow your business and refinance and lower your rates and do things like that over time. And it really does start with that community bank relationship that we talked about. Another value add that I think is important too when it comes to being in that position where you're starting to look at kind of the later stages of your life and refinancing and balancing your background is you need to understand how what you do plays out, and you need to understand your debt position and your financial position. If you want to grow and leverage your assets, if you're in a position where you can get into commercial or multifamily as opposed to traditional single family, this becomes a lot less of a problem. And the reason why is you typically have an entity borrower like an LLC, a limited liability company, and you're a guarantor as the managing member or owner, if you will, of the LLC. As a result, the first source of repayment is going to be the cash flow of the property for the bank. The second source of repayment is going to be the LTV, the equity in the property. In a worst case event scenario of repayment, they can take the property back. And the third source of repayment is your, quote, sponsorship. And how much you're showing every single month on your take-home tax return for cash flow becomes such a smaller impact to the lending decision that it's actually much more common to not even really be looked at with significant detail, so long as your net worth and your experience and your background is there.
Interesting. That's really good advice.
Yep.
Wow. Well, I'm looking at what again the things you're doing, and there are a lot of things, and being one of those 4-hour a night guys, unfortunately, I have the same. Actually, it's not unfortunate because I do actually most of my stuff early in the morning.
Right? Yeah, you get to appreciate it, right?
Like 4 o'clock in the morning. It's great. It's but on the other hand, too, there's you've got to have some point where you're gonna sort of achieve this point where you want to step back a little bit, and maybe your kids are grown up and they're gone and so forth. What's sort of your long-term play? And where do you've got these investments, you've got these companies, and what sort of the thing excites you about your future?
My son, I can't say it enough. Every day I look at him, I'm in total awe of what we did. My wife and I waited till we were older to have children, and we weren't even really sure we were going to do that, frankly. And we decided, and planned and ultimately did it. And if I would have known how much I would have loved being his father, I probably would have had 14 more. He is the highlight of my world, and everything I do really is, he reverberates through that. So, financial literacy is a big issue for me, in that I don't think we teach our kids enough about the things that are really critical to being successful adults in life. You go to school, you get microeconomics, but nobody ever teaches you how to, manage
balance a checkbook.
Yeah, your checkbook. Nobody teaches you how to buy a home, or buy credit,
right,
or get credit, or buy a car. Do all the things that are really essential, vital human adult things to do. And I've made that a bit of a passion project. And I don't know where all these business endeavors wind up for me. Very lucky and very, very fortunate, and I feel blessed because of it. But I've never had terribly dark times, and I think that there's a little bit of that ahead of me financially at some point in my life, and I can only hope that I've done the things that I can do to prepare myself for that and prepare my son's future. But I'm really looking at this point in my life in ways that I can give back. So traditional sense, and really rely on that real estate income, which we can do. It would be to maybe work on an endeavor with my son to teach him to continue to provide pro bono services. Success is not a destination. You don't get there and feel that. It's a journey. And my next evolution of my journey, I hope to do it with my son.
I like that a lot. That's great. That's great. Wow. Well, we are kind of moving toward the end of our time here, and there's so many other things. I'm just going to have you back, Chris, because there's definitely a lot. We a lot of directions we can go here, and
I'd love to do it, man. I love talking.
Yeah, it's great. Good. You've got a good radio voice too. So yeah, I got to listen to your podcast sometime. You got.
Oh, we got a long way to go before I can launch that. It's mostly nuances. Actually, we did an episode on the NFTs. It was interesting to talk about.
Really?
Yeah. Here's the short answer of what I have no idea what they're for. It drives me nuts. Anyway.
Oh my gosh, that's funny.
Long story short, it's a pleasure talking to you. I honestly, you're the kind of guy I'd love to sit down and just have lunch and just talk for hours.
Well, you're just down the street, so I think we just got to make that happen. But before we go, we got our wrap it up section here that we do, our segment where I ask you a series of quick questions on resources that you've used that our listeners might have an interest in too. So if you're ready, we can go ahead and wrap it up.
I'm ready. Let's do it, my friend.
All right. How about favorite real estate book?
As a primer, Rich Dad, Poor Dad, Robert Kiyosaki's book has always been a fan favorite of mine. He's not hugely into real estate, but does talk about the values in it. That's a great place to start.
Yeah, I agree with you. How about just a favorite business book in general?
Ironically, I found out this individual filed bankruptcy and had financial trouble, but the concept of the book was wonderful. Multiple Streams of Income by Robert G. Allen is one of the first books I ever read. I found it fascinating. It was the first time I really got some insight into this multimillionaire who was allegedly selling Mary Kay, which my mom did when I was young. I was well aware of what it was. It just showed me that, being humble and being hungry, it doesn't matter who you think you are. We should all be working.
Yeah, I love that book. I think that's, and I love that approach too. I think we do need to create multiple streams of income because, you never know what's going to happen in one area or another, and it's just smart stewardship, I think. How about a most valuable website for success that you may tap into?
Most valuable website for success that I tap into. That's a great one. I'm a sucker. It's not necessarily a website. I love, so I look at Apple News every single day, multiple times a day. And the reason why I do it is there's not one outlet that I feel like gives me the total breadth of information that I need in my day. So what I typically do is skim the news and read things on as many industries as I think might be relevant at the time, which, as you may have noticed, has been NFTs and crypto as of late. But because I don't want to, solely look at one website, I want to get a feel for what's going on and read the current events as much as I can. It's tantamount to reading the newspaper every single morning to me, but I do it twice a day.
Mm-hmm. Yeah, it's a little different than the old days. Is you'd pick up your newspaper on the front lawn, come inside, have a cup of coffee. Yeah, it's very different, very different. How about a favorite app? Anything on your phone that you use on a regular basis? Couldn't live without.
Oh wow. My wife would tell you it's the sneakers app because I have an obsession with old shoes, but thankfully she's not here. I actually have taken I hated social media growing up. I've really spent a lot of time trying to I guess change my perspective on social media, things like Instagram and TikTok. I've spent a lot of time understanding how social media works, how we as humans interact with it. So believe it or not, I'm going to say Instagram, and I'm going to say that because I find that the value in it is connecting with people in a way that I didn't appreciate just as recent as 6 months ago.
Wow, really? Well, that's something for us to talk about on our lunch, I guess.
Mm-hmm,
Because I want to understand that. I'm still trying to get the whole Instagram thing, even though we use it to promote things and so forth. It is an interesting phenomenon.
I detested social media. I swore I'd never be on it.
I'm more
now. I'm with an Instagram verified profile, and according to the internet, I'm somebody cool, I guess. It's weird, but people do connect with you there. I don't know why.
That is wild. It is wild. How about a favorite quote?
Favorite quote? Wow. Okay. I've said it twice in this, maybe 3 times. Relationships are the truest form of currency. I really, really believe that your network, it's not what you know, it's who you know. I really believe in all those cliche things, but I do believe the power of being a good person means something, and people responding to that because they have a relationship with you has value.
I agree. That's excellent. And then this final one here, which is kind of an interesting question. It doesn't sound like you've ever had to encounter, but let's say you lost absolutely everything and all of your assets, and all you have is $1,000 in cash. Knowing what you already know, what would you do with that $1,000 to rebuild your business?
It would be easy for somebody younger to say, hey, I would get into cryptocurrency, but knowing that was my last $1,000 and how volatile that market is, I wouldn't do that. I would get into real estate wholesaling, even though I'm not a huge advocate of that space. There is money to be made that is relatively quickly, and I can source a good real estate deal any day of the week. And I would continue to build that up until I was in a position to buy a piece of real estate and work from there. But if it happened, I would find a way.
I think that's a smart one. In fact, I talk to guys all the time on the phone that did exactly, on the show that did exactly that. Had nothing, and they went out and started wholesaling, and bit by bit, they started to build up their cash, and then start getting into rental properties and other things. And I think that's what I'd have to do too. I agree with you on that one.
It's one of those weird spaces where, believe it or not, if you can get somebody under contract, pay some consideration, a little bit of money to get it under contract and turn it to somebody else because there's value in the upside, you can make money quickly. It just takes a lot of persistence and a lot of time.
Yeah, there is definitely a lot of work to do, but doable. Wow. Well, Chris, this has been fantastic having you on. I'm sure there's plenty of folks that want to find out more about you, and I'm sure more about your bank and some of the other projects you're involved with. What's the best way for folks to reach you?
Easiest way to connect with me, I'm on every social media platform you can imagine. Instagram, YouTube, TikTok. I don't dance in any videos. I'm sorry.
Thank you for that.
Yeah, I try to make everybody feel better. The username's all the same. It's at Chris, my last name, Naghibi, Naghibi, at Chris Naghibi. You can find me on all of them. Feel free to message me, DM me.
If you are ready, we can go ahead and close out with your best old hound dog, Hal. Are you ready
I'm ready
for this?
for it.
Okay.
One little asterisk though.
Oh.
When my wife comes down and yell at me in 5 minutes, I hope to be off this thing because she will come down here and tell me to stop doing it.
Will you stop howling again, Chris?
Yeah, this twice this week already. All right, ready? Here we go. Oh!
That was a good one. I hear her footsteps now.
Yeah, I'm sure she's on the way.
Well, Chris, thank you so much for being on. A lot of great information. And you're just a heck of a nice guy, too. And hopefully we will make contact here. Like I said, we're down the street. So,
yeah, man, grab lunch. Let's do it.
Let's do it. Also, I want to thank all our old dog listeners out there, too, for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we really appreciate it. And keep in mind, all of the things that Chris talked about today can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog, and you're going to look for the episode with Christopher Naghibi. And that is it for today. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.